In the world of massive global corporations, few are as big as India's Adani Group. We're talking about a true titan of industry, ports, power, infrastructure, you name it. But in early 2023, this corporate giant and the man who built it from the ground up found themselves right in the middle of a firestorm that would shake the entire financial world.
So just how big are we talking? Well, try this number on for size. $120 billion. That was the fortune of its founder, Gautam Adani, which made him one of the wealthiest people on the entire planet. And what's really wild is that over $100 billion of that was added in just 3 years. So the big question that started rattling markets was, how? How did all this incredible wealth appear so fast?
Well, here's where that money came from. The stock value of Adani's 7 main companies just exploded, skyrocketing an average of 819% in only 3 years. I mean, that is a truly insane, meteoric rise. But while most investors were popping champagne, one American investment firm looked at this number and sounded a massive, massive alarm.
And that firm was Hindenburg Research, a very well-known short seller. After a 2-year investigation, they published a report with this absolutely explosive headline, making an accusation that sent shockwaves across the globe.
Okay, so what exactly did Hindenburg claim was going on inside this $218 billion empire? The report really drilled down on a few core allegations.
The report laid out a pretty stunning case. It alleged, brazen stock manipulation and an accounting fraud scheme that had been going on for decades. And what was the engine for this whole alleged scheme? A super complex network of offshore shell companies in tax havens supposedly designed to secretly move money around and pump up the company's financials. And right at the very heart of that offshore network, Hindenburg pointed the finger at one key person, Gautam Adani's older brother. The report basically paints Gautam's brother, Vinod Adani, as the puppet master of this shadow empire, a huge, complicated web of companies that were allegedly designed to operate completely in secret. Now, when investigators started looking into these supposed companies, they found some really bizarre red flags. I mean, dozens of these entities had no employees, no real addresses, and basically no online footprint. Some had almost identical websites that were all created on the same day, using stock photos and listing completely nonsensical services like consumption abroad. It didn't look like a bunch of legitimate businesses.
So what was the whole point of this strange network? Well, according to the report, it had 2 main jobs in this elaborate scheme. It really boils down to this: manipulating the stock prices of Adani's public companies and, at the same time, laundering money into those same companies to make them look a whole lot healthier than they actually were.
Okay, so here's how the 2 parts of the scheme allegedly worked. On one hand, you have stock parking. This is where offshore entities, secretly controlled by Adani insiders, buy up tons of Adani stock. This creates artificial demand and boom, drives up the price. Then, on the other hand, you have alleged money laundering. This is where money from these same shell companies gets funneled onto the official books of Adani's public companies to boost their assets and make them look like a much safer bet for lenders.
That stock parking has another really critical piece to it. See, in India, there are rules that say at least 25% of a public company's shares have to be held by the public to keep the market fair. Adani was already super close to the 75% insider limit. Hindenburg claims that these offshore funds are secretly insider-controlled, which, if that's true, would push several Adani companies right over the legal limit and put them at risk of getting kicked off the stock exchange.
Now, beyond just this offshore network, the Hindenburg report pointed to some fundamental red flags in the Adani Group's finances. They suggested the entire structure was dangerously unstable, or, in their words, a house of cards.
So what were these red flags? Well, first, sky-high valuations. Hindenburg argued that even if you forget the fraud allegations, the stocks were still overvalued by 85% or more. The group was also carrying a ton of debt, and they were often using their own inflated stock as collateral for loans. And finally, 5 of the 7 main companies were facing a cash crunch, with more short-term bills than they had cash to pay them. Now, just for a second, imagine you're an auditor trying to make sense of a company like this. It's not just one company, it's a complete maze. The 7 main Adani companies have a staggering 578 subsidiaries. Auditing that would be an incredibly complex job. So who did Adani Enterprises, the flagship, the crown jewel of the group, hire to take on this monumental task? A tiny, practically unknown firm called Shah then Daria?
And when you look closer at this auditing firm, well, the details are pretty startling. It had no website, just a handful of employees, and paid something like $435 a month in rent. The report also points out that the partners signing off on these multi-billion-dollar audits were as young as 23 and 24 years old when they started. I mean, it raises a serious question. Could a firm this small possibly have the resources to properly scrutinize a conglomerate this massive?
Now, Hindenburg didn't just throw out a bunch of allegations. They ended their report with a very direct challenge to the Adani Group.
They laid out 88 specific questions, asking for clear answers on everything from those offshore entities to the group's debt levels. And they basically said, look, if Adani is truly transparent, these should be some very easy questions to answer.
And that really brings us to the core of it all, doesn't it? Is this a story about a national champion, a corporate titan, being unfairly attacked by a foreign short seller? Or, as the Hindenburg report claims, are we actually looking at one of the largest corporate frauds in history? The answer is still being fought over in boardrooms and courtrooms, leaving the rest of the world to just watch and wonder.